Asian markets are likely to consolidate here after the very strong rebound that we have seen over the last few weeks. There is no doubt that the market environment has improved with the signs of being infections in developed markets. In Asia also, we are not seeing new hotbeds of virus, which is supportive for markets in the region. We are also hearing more positive news flow on opening up of the economies, especially in developed markets, I think, which is good news for Asian equities. But having said that, we should not lose sight of the fact that we are in a recession right now. IMF yesterday announced that it will be the worst economic downturn since the Great Depression. So around the region, I think the growth will be very weak. Market expectations for earnings are still very high, which needs to come down. So there are several push and pull factors for Asian markets at this point of time. But I have to say the course is not very clear for Asian equities to rally from here. That's why we will not be chasing market at this point of time. But if we do see a pullback, I think that would be a good buying opportunity.
And here's the rub. There are so many people out there who've been watching the strong rebound off the lows, and they've got FOMO, massive case of FOMO, fear of missing out. So how should they be using any consolidation or pullback? What would be the best investment strategy they can take in terms of sectors and geography?
Yeah, I think in this kind of environment, investors need to stay with sectors of markets which could perform and rebound even if we see a slight pullback in equity markets over the next few months. And in sectors, we clearly prefer healthcare and technology stocks. Healthcare, simple reason because there's a very strong demand for drugs and pharma at this point of time, given the healthcare crisis. One of the other factors which I think will support healthcare stocks is the withdrawal of nomination by Bernie Sanders, because healthcare stocks were under pressure as there was a risk of a bill proposed by Bernie Sanders which could reduce the profitability of drug companies. So that would be, I think, the clear beneficiaries of the crisis that we're going through. The other sector, I think, which would benefit would be technology stocks. As all of us are staying at home, there's more demand for technology products. We are using more laptops and mobile phones, DRAM, etc. So all the companies in this sector, I think they will benefit. And the other, I think, thing need to keep in mind is that right now there's still market is very concerned about the liquidity and funding crisis. So investors need to stay with companies and sector which have very strong balance sheet, and those would be healthcare and technology stocks.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.